The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, after starting higher in the overnight trade, this grain complex really just faded throughout Thursday's session, kind of ended mixed on the day. But we got some good support in the livestock trade, and some of that might have come from the stock market. The Dow Jones breaking the 40,000 mark for the first time ever. We're going to talk about all that here today and round up Thursday's trade action. Joining us for a conversation, Senior Market Advisor at Total Farm Marketing, Brian Doherty, is with us. Brian, it's good to talk with you again, sir. Thank you for joining us. Hope all is well in Wisconsin.
Yes, sir. Thank you, Jesse. All is pretty well in Wisconsin. We're like everybody else. We've got our pockets where guys are really trying to find fields and get to work, but generally it's been okay. So we're doing well here. What we would like to see do a little better were export sales. They were pretty lousy today. Corn, beans, wheat right across the board. Not terrible in corn at 29.2 million, but not excellent either. So second day in a row down after reversing in some of the grains yesterday. Beans kind of hung in there, but corn disappointing last couple of sessions, and maybe a reflection of what we thought was happening. Big farmers selling. And then planting progress, no matter how you slice it, 49% on Monday, it's still a stat. It's a little bit behind, 5% behind. And you think the forecast being kind of wet, but boy, farmers sure are trying to make progress where they can.
No, that's a good point. And, with how fast some farmers can go today, I mean, we get a couple dry days here before we get to Sunday and get into next week's crop progress numbers. I'd have to think some of those pockets that are dry enough, we're going to see a substantial uptick there, I would have to think. So to that end, not sounding the alarm on the weather and the planting progress quite yet. And to your point, that farmer selling, I just think we got so close to, for instance, 5 on D's corn that a lot of people had orders working just below that $5 mark, Brian.
They probably did, and they should. And the market made a good recovery into that window. Didn't quite get up. There's a gap. We've been talking about this gap since January 2nd, but it's a little space on the chart that when the market opened up on January 2nd, it opened up lower than the low from the end of the year. So you leave a space on a chart, and that's called a gap. And the sort of not rule of thumb, but sort of bias is that gaps get filled, and it's just a matter of time. And so as the market was kind of marching up there, it looked like we're on the verge of filling the gap. Didn't quite get there. But to your point, most likely a lot of producers said, I'm not going to wait for that. I'll just get my order in a little below. And sometimes that happens. You get a bunch of sell orders out there, and you don't have a whole lot of new buyers there. So that may be what happened. But ultimately, I think the last couple of days, what happened is traders also move sell stops up pretty tight. They've known this corn market for some time. When you get some strength to it, it seems to disappoint. So if you're long the market making some money, you probably ran your sell stop up underneath this, got triggered, that creates a sell. Down you go. Now we're back in the middle of the range again here. We got to see if this wet weather's for real, or if we kind of seen our high here.
Well, hopefully we haven't seen our high here. I think a lot of folks would like to see a little bit more, especially if they missed the opportunity on this most recent rally. I mean, let's talk about that a little bit, Brian. Farmers have been busy in the field. Maybe some folks haven't managed their risk properly here, and now they're the same old adage. They were hoping for a certain number, didn't quite get it, a couple cents away, and now they're kicking themselves. They missed the boat here. So I mean, talk about that a little bit. Sometimes that psychology can put a damper on what you're thinking about your marketing plan.
And I'm going to take a little different twist on that. So as far as like missing the boat, I think a lot felt they missed the boat last fall or early last winter. So they have been aware of this, and this market pushes up here. And there were several that I talked to that said, I just couldn't wait around any longer. I sold a bunch of corn. They just don't want to get caught with a bunch of corn again if all of a sudden the skies part. Oh my goodness, planting's going well, and there's nothing friendly right now. So I think there was a lot of good farmers selling. When I say good, farmers that needed some pay raise, they got some pay raise, and they moved this grain, and pipeline's probably pretty full right now.
I know the fund money activity, you kind of mentioned that a little bit too. It looked like here in this rally, we'd seen funds moving into commodities. Well, on the day Thursday and even a little bit on Wednesday, it felt like maybe some of that money flow was going elsewhere again. And the Dow Jones breaking 40,000 for the first time, I have to think that could lead to some more money flow into the stocks and metals and energies, et cetera. Some of those outside markets, maybe we're seeing a little bit of that here towards the end of the week, Brian.
I think there's some of that, some money shifts, some things that are moving the market. I think also the reality is that in mid-May, if you're not seeing a strong export market, okay, one, you have delays in planting, but what else? Okay, so delays in planting. It's kind of funny the language that when you talk to farmers and they'll say how fast they can get things done, or you talk to a farmer and he's like, "Oh boy, I don't know. Looks like we're going to be out for a week," and then 3 days later they're going, and within a week they're done. Um, Things move rapidly, and we don't want to beat that point to death, but um, we talked to a lot of farmers, and there were a lot of farmers planting today wherever they could. There's rain on the radar, and obviously those people aren't, but in a lot of states, and there's just enough window here that it looks like there's going to be some good progress. So I think that's been the problem with corn. Just it took a dime premium out of the market really quick, and a dime to 15 cents on expectations that planting will probably pick up real quick in the next 24 to 72 hours. And then it looks like most of the Midwest is wet again.
You talk exports, and I wanted to bring this up with you because I bet you could give us some good perspective here. Obviously, exports have been pretty dismal. Soybeans out of the U.S. especially have been kind of bad. I know last week the WASDE report gave us a pretty healthy number for soybean stocks. And then I think about this too, with the U.S. adding more tariffs on China vowing retaliation. When I think China and tariffs and trade war, I immediately think soybeans. We've seen that before. So, I mean, you think about this soybean complex as a whole, Brian, are you concerned about the poor export pace, one, and two, maybe the potential of some retaliatory tariffs from China?
Yes and yes are the answers. But let's put things into some perspective. And I just want to share this. So each Thursday, the export sales are released, and we saw this morning's number. You look at corn, 1,904,000,000. That compares to last year, 1,498,000,000. So you're running about 400 million bushels stronger in corn compared to a year ago. Soybeans, on the other hand, you're right at about 300 million bushels less. And it's the South America enigma. It just, they've had plenty of inventory and they're cheaper and they've been selling, and China would rather buy Brazil, it appears. And then you have this added stress of political, whatever you want to call it, politics, and it's just not a healthy background. Now, does that mean China's not going to buy beans? Probably not. It's in the whole mix. I would say these tariff things in the reports that I've read, it seemed like this was a sort of a soft warning shot by the administration. They warned them they're coming, they're talking, but they're also sending a message that, look, we can't be losing jobs at home because you're undercutting the marketplace in all these other areas like batteries and EVs and all these things. But when push comes to shove, as long as there's a supply of inventory out there, in this case, soybeans, we're talking, China's going to go to the cheapest source or the most readily available source. And right now it's still Brazil, despite this flooding issue. So that's another thing that, gave the market this spike here the last couple of weeks, and now it looks like there's going to be some crop loss. But when you put it in the context of the larger crop, it's a step in the right direction of less supply to South America and some logistical issues, Jesse. But it's not a game changer at this point.
We are talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing, here today on the show. Brian, let's go to livestock. Good supportive day in cattle. Hogs started lower, a marketing year low on the weekly export sales number. It was just over 21,000 metric tons, but yet hogs kind of rebounded late in the session as well. Maybe some of that stock market enthusiasm spilled into the livestock trade on Thursday, at least partially. Your thoughts on the cattle and hog trade that we saw Thursday, Brian?
Yeah, we've almost been flip-flopping here between grains being friendly and livestock not, and then livestock friendly and grains. So it seems like the trade is willing to trade spreads there or something. But the bottom line is we're seeing the pickup in the cutout values for beef. that is really a good sign. So we're seeing cattle futures try to move up. We continue to hear from our cattle people. There's this tight inventory and tight supply. We've questioned, and I've questioned, you and I have questioned that can the consumer at higher prices, can we build demand? And I'm just convinced no. We've got a kind of a what they call an autonomous demand out there, and that is those who can afford beef and won't eat. That's going to happen. Those who can't aren't going to all of a sudden jump through hoops and buy a bunch of beef. Inflationary times, these are sticky. So it's nice to see the push up. It's supply driven, some demand driven, maybe a little bit more for the grilling season here as we get towards summer and people really want to get out and do something fun. Maybe grilling is that. But as far as the big picture perspective, I'd like to be more friendly, but I don't know if demand can do it. I do like the stock market sending a signal, hey, people are willing to invest. I don't know though. I think it's a little more concerning though on the big picture whether or not the consumer can step up in the beef market. I don't think so.
I'm going to add to that because really in the last, I'm going to say 2 weeks, I've started seeing more posts from friends on social media, pictures, people talking about prices at the meat counter, the grocery store. Someone just posted last night, 2 pounds of 85.15 ground beef. They were talking a couple years ago, you could go get that for $5. Well, now you're talking 12 in some cases. I mean, you're talking basically a doubling in some of these meat prices, especially beef at the meat counter. And, you hear talk that, grocery prices up some 25-30%. So, I mean, to your point, I'm starting to hear some more of this feeling of, hey, we're really kind of getting tired of where some of these prices are at the grocery store, Brian.
Amen. And it's just the nature of what inflation does, and it's the silent killer. It is robbing people. Saw a local newscast here last night, kind of hit home. A young couple in Wisconsin here. They are both nurses. I think they're nurses, and
Mm-hmm.
and they've got a couple children. Daycare. They're going to stay. One is going to stay home because one half of their pay is going toward daycare. Now, where are you supposed to fit beef in there, or a
Mm-hmm.
steak, or it's challenging right now. So I think until the consumer feels like, hey, you know what, things are headed down in the supermarket, or we've got some relief. Unfortunately, I don't see that in beef because of the supply side, but they'll be more selective in their buying, and that's my point about building a demand. You're not building a demand wedge here. You're not building a new demand cycle. You're not building a new demand market. You're reliant on the old market to stay strong, and people have purchasing power that's been eroded.
So we're thinking about things at the grocery store and more. I know dairy products part of that. You watch dairy markets closely, Brian. Any notes, any updates for us of what we're seeing in the dairy trade lately?
Oh, just we've been talking about for months that it was a sluggish market and the processors were buying only as all of a sudden, like a rubber band that's all of a sudden snaps. You get this big run in the dairy market since the beginning of April. Just new lows in the early April and then snap. And all of a sudden, just pick your contract. I happen to be looking right now. Let's just go to the July milk contract here, and bottomed here early April at 1705. And all of a sudden, today hit a new high, 2057. Really nice rally. Good demand, good cycle in. I'm not so sure it's much demand as it is that the processors all of a sudden at one time start to really push this thing and push into the cheese complex. But there again, you've got cheese, dairy that's been on the defensive, and you can substitute that in and put cheese on pizza and elsewhere, and it's reasonably priced compared again to some of the higher cuts in beef. So really good move in the dairy industry. I think the big concern there, from my view, is that we went into a cycle where the herd wasn't like evaporating, but I think part of that was keeping cows back for calves, beef calves. So you got older cows in the mix. You don't have as many heifers in the ready to go. So the market's anticipating some tightening supply, and the market's ahead of necessarily the cash market right now.
Well, Brian, floor is yours. Any final thoughts for us here today?
Well, I'll go back to the grains, and you look at where beans are and corn is. We talked about creeping higher prices, and then you get your December corn close to $5, and then you get your November beans back to $12. And while these aren't the kind of prices that I think most of us would hope for, we'd like $5.56 corn and $13, $14 beans. These are still good starting points. Remember, we're in mid-May, and if you don't get something to add to this bullish tone, things could get a little defensive quickly. And we saw that maybe yesterday and today in the corn market. So if you're thinking of making sales, follow that instinct, start getting things done. Keep in mind where we are time of year. If weather cooperates, you're going to find that the end user is going to be less than aggressive. And that's our concern. So I'd start making some sales, old, new. I would look to learn how to cover those if I need to, if I want to get aggressive. But work on strategy, work on strategizing more so than trying to outguess whether it's going to rain next week or not.
Brian, if folks want to reach out with some questions, I know they can get a hold of you multiple ways there at Total Farm Marketing. How can they contact you?
They can. The best way is just give me a call, 800-334-9779, or shoot me an email, Brian with a Y, at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com.
Brian Doherty, Total Farm Marketing. Always good to chat with you, sir. Thanks for joining us. Have a great weekend.
Jesse, my pleasure. Thank you.
And that's going to do it for Market Talk today. We're out of time. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.